Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, we are looking quite good here on the 4-hour. This is our sort of intermediate level of resistance within within this potential sideways range that we are going to be trading in. This $44,000 level. It is looking good, right under it, consolidating below. If we can break above, hold above, and then yeah, realistically we are basically going to be targeting this $47,000 level. Obviously we could get a pullback from there, rejection, we can come all the way back down, bounce around this range, trading here, maybe only bounce to the middle part, maybe even break through after a consolidation below, but nonetheless we will be expecting a test up to here if we do break and hold above 44,000. So yeah, things looking good. This is looking like a relatively strong low in the medium term and looking to make progress from here. If we do come back down, you would expect people to buy the back check and then go for a nice paycheck to the upside. So yeah, things looking better. I'm sure the extreme fear in the market is somewhat thawing, but obviously still got plenty of work to do. I mean, still got lots of work to do to reverse this trend. We've got to break above some important levels. I mean, 47,000 is an important level, and then obviously 53,000 important level before we even then start to ask about the $59,000 level, where we will then potentially go full bullish again. Any of these areas beforehand will be nice areas for the sellers to come in and slam us down lower, so we've got to bear that in mind. If we look also over at the Ethereum Satoshi pairing, it has driven deep into this resistance area. Nearly got to the top of it, easing off a little bit here though, but constructed nonetheless, looking like this could be a low. Once we get back above here, start to make some progress back into the 0.08s. Then yeah, I think the market will that will obviously indicate that the market is becoming a bit more friendly to risk, and then yeah, we can potentially see more upside. Bitcoin dominance dipping back below 40%, as you can see here as well, after its nice pullback in what we are hoping is a lower high here. We'll just quick look at the USD pairing as well, because that is getting up to this 3,400 area we talked about. Get back above here, then yeah, we can establish price action back in this zone, and then hopefully put to bed this downside move, this medium term pretty aggressive bear trend that we've had, and then yeah, look to make some nice juicy new all-time highs relative to obviously relative to these highs here, with this obviously being a higher low relative to this higher low that we had back here. So that is what we're looking at. What is the main driver? Number one is obviously stock markets are recovering, but obviously there is an underlying dynamic that is driving that. Obviously a correlation is not causation. There is a reason stock markets are driving up, which is helping Bitcoin, and it isn't necessarily just Bitcoin's moving up purely because of the stock markets, but we do obviously have this 10-year easing off a little bit, not so aggressive looking in this move now, and what is probably most notable, I mean, the reasons I was kind of saying, and these are pure speculation, is that this can't continue. So the Fed can't really do its quantitative tightening. At least it can raise rates. It can do the 4 rate hikes this year that it has planned, providing it's still doing all the QE support to the market. So that is what the market is then kind of thinking. Yeah, do your rate rights, but you're not going to stop the bond purchasing, and you're certainly not going to do QT and reverse that bond purchasing. That is literally just a that is a what is George Cameron saying, a non bueno or whatever. That ain't happening. And then where can we see that view, in my opinion, being reflected? Where can I see my confirmation bias? Right over here in the dollar that I was talking about was looking a bit weak, wanted to test lower. This, I think, is maybe other participants in the market came to the same conclusion that I did, that we are going to have to see either yield curve control, either UBI, continued support for bond markets, basically continued printing of dollars, for want of a better term, although technically it's printing of bank reserves. But yeah, you can see the move. This is what we're looking at, the move down to basically this area here. So this is quite an aggressive move. It would be, it obviously can put in a higher low here, but I mean the aggressiveness, the velocity, the voraciousness, whatever non-technical words you want to use for this, will be pretty daunting for anyone wanting to buy this. They'll be expecting this potentially to come back down lower, and then if we do break through this horizontal, yeah, we are targeting the bottom side of this ascending broadening wedge, which is what another thing that I have been mentioning. Once we kind of drifted back in, couldn't get acceleration above, swing failure above. So this is clearly going to be very good for risk assets. This is clearly going to pay into that crack up boom. Like I said, the central banks, the government, they all need inflation. They just don't need you to know that you're getting hidden taxed by it. So ultimately, they can't really fight it. And then when they made murmurs towards really fighting it in the market, the bond market had one of its most aggressive moves in a long time, and struck the fear of God, to use that expression again, into central bankers, governments, everybody with a lot of debt and with a vested interest in the finance 1.0 system, because that was clearly going to blow up if that carried on. We probably only had like another week or two of a stock market at this level, and not about 50 to 80% lower if that move in the 10-year was continued. So now the market knows that, realizes that, it's put two and two together, and it's come to the assumption that basically it's going to have to be YCC or UBI. And I'm sure at some point in the next few weeks we'll start to hear that, because look, people can't afford to fill their tanks. Look at it. Look at oil go. I mean, they are massive problems in Kazakhstan over prices, fuel prices. Obviously, that's what's caused a lot of the unrest in France as well, with the yellow jerseys or whatever. So, like, behind obviously the number one cause of revolution, being people not being able to afford food. Number two is basically energy, filling the cars, heating the houses. So, I mean, thank you to the ecology people, the green people, the basically the environmental nuts that think global warming is a new thing, and the world didn't come out of the ice age like 10,000 years ago. Like, global warming is not a natural process. Those nuts obviously are basically having a real structural impact in the commodity markets, with obviously exploration, like permits for mines, all that cool stuff, and that is going to structurally drive these markets up and just mess everybody's pocketbooks up. So yeah, not much else after that crazy rant to look at on here. What else? Is there anything else? Not particularly. So what we shall do is have our daily checkup on stochastics and see if we can be getting somewhere useful with that 5-day and weekly. 4 hour short time frame is probably going to be looking a bit toppy. I mean, 8 hours, well, accidentally clicked on that, yeah, but yeah, 4 hour turning down from a high level. 10 hours going to be pretty elevated as well, but still moving up. 12 hours got a long way to go, so 12 hour looking good. Daily got plenty of room to run. By daily got it's got all the field to run into. Same with 3-day, all the field to run into. And then here we are, the 5-day and weekly. We need to get these turned up, and we need to get these going. If we get these 5-day and weekly turned up and going, at a very minimum, we have to be expecting this $58,000, $59,000 level, and then it will be, do we break above that, and at which point there is a high likelihood we go towards $100,000 Bitcoin. If we get rejected and come down there and print a pretty obvious macro lower high, then start to come down, this support area here and this level will start to look pretty precarious. Obviously the line in the sand then would have to be $40,000. Take that out, then yeah, that'll be it. It'll have to be exit stage left. But that is not to say that is what I expect to happen. I kind of expect, like we kind of saw here, bam, onwards and upwards. I kind of expect that onwards and upwards, and then once we get here, we could see a resolution of this potential. Well, it is a bull flag. As of whether it plays out in a bullish fashion, it will be obviously another story. But if that does play out, then yeah, I mean, we're going to be millionaires if we're not already. And again. Like our favorite, like it's not even our favorite YouTuber, like some other clickbait YouTubers, some clickbait simpy YouTubers like to say. But yeah, that is it, guys. Remember, this is not a financial advice. I am not a financial advisor. But yeah, things looking good, looking like the market could be turned around here for risk assets, because like I said, the Fed can't raise the tighten. If they're going to raise rates, they can't stop, and they will have to increase the bond buying and the purchase of other things like that off-balance stuff, the stuff that you don't even know or see about, like the stuff that went on with the repo market, the apparently 11 trillion that was lent out during the repo crisis that no one is really talking about. There was lots of off-balance sheets, special purpose vehicles. The Fed will have to prop everything up. We are not going down. Yeah, crack up, boom. The once we actually start to see the bond market collapse, that will be the end. That will be the end of the financial system as we know it. And then yeah, stocks will go a bit mental then as well. But they will be valued in dollars, and currency will go a bit haywire there. So yeah, it'll be interesting times when that happens, but I am sure I have faith with our manipulators in chief to keep this Ponzi going for a lot longer than we can expect, basically. So yeah, there you go, guys. Remember, this is not financial advice. I'm not financial advice. Always do your own research, and I shall speak to you guys soon.